go. Should be live. All right. Let's see here. All right. What's up, everybody? Welcome to Own the Chaos. My name is Brad. That guy over there is Fat Man Zoom. The stock market is crazy and chaotic. We made it our mission to help you guys own it. Markets seem to be bouncing back just a little bit today, but we're going to talk about that. And of course, everything that's been going on with Lucid, one of the big winners today. We have Dollar Tree on the docket too. So lots of good things to talk about. But Fat Man Zoom, let's hit everybody up with the starting five.
Yeah, man, we got Lavraj, Savvy Money Show, Jeff Panika, Pastor David, and Rudy Brown. You are our starting five today.
What's up, my man?
What's going on? Good.
I was just going to say it's been a pretty wild day. Lucid Motors obviously going to be the big topic of discussion for today, and it is up 8.5%. Dollar Tree is also up like 13.5%. Just crazy moves on both of those today. But the overall market does seem to be bouncing back a little bit today after the worst day we had yesterday in 6 months.
Yeah, it to no one's surprise, when you have those huge red days.
Yeah,
it's not a surprise the next day. I think tomorrow's going to be very interesting, and hopefully we can get into those conversations about what's to come beyond that. But like we always say, even if the overall market's going through something, there are definitely opportunities. There's definitely things going on. There was certainly no shortage of news in the market today for sure.
Yeah, absolutely. Most of the stuff that's been leading the way today has been some of the big tech that we kind of talked about. The FANG stocks are having a decent day. Apple's up a little over 1%. Affirm's starting to make a little bit of a comeback. But really, the cyclicals, the industrials are kind of having a pretty decent day too. Spirit's up 6.7%. Just crossed over $46 a share. Boeing having a great day as well. Those are the ones, the reopening type stocks that we've been talking about that are actually having the decent day so far.
Yeah, Spirit's been a monster, and we talked about it in a level 3. This move is, for over a year now, we've talked about how far off this stock has been. I believe it was on a 52-week low video. I believe it was on stocks that could double video. And it does seem like the move is finally happening, where it's been a little bit, but now it feels like it's starting to figure itself out. It's still got a lot of room to run, though. That's the reality of it.
Yep. It absolutely does. Right now it's sitting at $46. And we come look at the daily chart. It felt very obvious when it started to finally bottom down at 37.5 and made the turn and started to break over this downward trend. It looked like we were going to see a decent breakout. I wasn't expecting the breakout that we saw today. And admittedly, I ended up closing out of the rest of my calls that were on this with well over 150% gains. This was great. It was a great trade for me. I think it does end up continuing to go. If I see any kind of dip, I think I'll be back in with some more calls on this one, man.
Yeah, definitely calls for that. So that'll be good to see. Speaking of calls, I bought leaps on Apple today. I've been wanting to get into Apple. I did get leaps on Apple. I plan to use the second half of the wheel strategy against that as well. Yeah. So not too many moves. I'm not inclined to make many moves today because I want to see what tomorrow brings. And ultimately, I want this shakeout as far as the debt ceiling, inflation. Stocks are going to do what they're going to do. So I'm not as worried as that, but like just really the infrastructure bill to go through and the debt ceiling to be raised. And I think those will be the time for me to move back in, or not even move back into add on. I'm not getting out of anything.
Yeah, and that's definitely going to be a topic of discussion moving forward. I mean, today we're waiting on some news as far as the government shutdown, and there's a lot of people that are kind of worried about a government shutdown hurting the markets, but historically, it's actually been the opposite. The S&P has done really well during government shutdowns as a whole. Over the last 6 government shutdowns, actually, it's done had pretty decent moves. So I don't know if there's anything necessarily that people need to worry about with the government shutdown. Really, what needs to be addressed is the debt ceiling and all that good stuff, which is will be due by October 18th. So that'll definitely be something to keep an eye on. But as far as everything else is concerned, we have some movement on the infrastructure bill and stuff like that, which obviously should bode well for the markets in general. But um, again, there's just a lot of noise that's been going on. We talked about this briefly yesterday. That I think that these are going to be good opportunities, at least in my opinion, to get into some dips on value stocks in particular, and the reopening plays. I think are going to probably outperform going into the end of the year. What doesn't necessarily bode well for stocks that are high flying, high multiple, don't have positive inflows is going to be probably going to feel the burn. We're looking at Peloton, obviously Zoom also taking a little bit of a hit, even though came in profitable last quarter by a wide margin. Those are going to be the ones that typically get hit hardest as we start to reopen because of interest rates going up and that sort of thing. So it'll be important to know what you need to be in to see the type of gains that we're expecting in the broader market.
Yeah, for sure. And going into specific stocks and specific news that's been going on and what has been moving, um, I I have some that I wanted to bring to the table, but I noticed in the chat, and guys, make sure you guys like and subscribe to this content as you guys are having these conversations. We'll try to do our best to bring it to light. But CAI, and I know in Discord we've been talking about, or not
Yeah.
we, but you have been talking about it with some people. I don't know what's going on with CEI. I'm actually out of the loop today. Why
Yeah.
don't you talk about it a little bit?
Yeah. So CEI is an energy company, and there hasn't been much that I could say has that where there's that would have motivated me to get into it, other than the fact that there was a lot of people on social media getting into it. And I won't name names, but there's folks that are on Twitter that have 400,000 plus, almost a half a million followers on Twitter. That whenever they say something about said penny stock, it goes crazy. This is one of those, another one of those situations, and it's really important to just kind of understand the dynamic of these penny stock runs. CI has gone up 1,000% since August 20th ish, and actually had seen highs of beyond 1,000%. And then earlier today, it my Weeble is acting up. Earlier today, it had a huge drop off. It got halted about 4 or 5 times within about an hour, and it's been pretty rough. So, you know, I don't know exactly what's going on. For me personally, I never saw the value in it to just go in and buy it. I don't particularly go and buy stuff just because somebody says go buy it. We always talk about not doing that, but really truly, diving in and seeing if there's potential here and doing your own due diligence and making your own decisions. That's kind of how we operate here at Own the Chaos. And so this is one of those situations where, yes, it was a great move for anybody who got into it. But I think that if you got into it because you saw the value in it, I'm not quite sure where that's coming from. But again, these things move all of the time. Congrats to anybody who made money on it. You can't get mad at anybody who makes money on these things, but it when things go straight up like this, they're bound to have a pretty decent rebound.
Yeah. Well, and speaking of less speculative stocks, the ones that really have had the news, we'll certainly talk about Lucid. We'll save that for a little bit, but let's start with Dollar Tree. Dollar Tree went off today, and
Yes.
it's right around that $100 sort of psychological level. So it'll be interesting to see how it goes from here. But it's been an absolute monster. It didn't go on the watch list, but it was one that we had put this morning in level 3. So for those of you who don't know the news, Dollar Tree didn't have a great earnings. I think you said something about they also were like having products priced above $1. I don't know what that was about, but since their earnings, I think Dollar General as well, they just hadn't performed well. They had a drop off, but they recently announced that they were increasing their share repurchase program an additional 1.05 billion. And now it's what, $2.5 billion, if I'm not mistaken, for their share repurchase program, which is great.
Yeah. So if you guys didn't see the news, so Dollar Tree did come out with that buyback news, but yeah, they're starting to put out products that are going to be costing more than $1. So obviously that's going to be good for their margins on that side of things. But the buyback is the big news. And we've been talking about this for a while, starting to see this trend of larger companies coming in and buying back up shares of their own stock. And this is going to continue to be a theme, I think, going well into 2022. These companies are flush with cash. And we first saw it with the banks, and now we're kind of seeing it go into some of the other stocks as well. We saw it with Palo Alto and what it did for that stock. Obviously, it's doing well for Dollar Tree right now, and we're going to continue to see this trend continue in these larger companies. I'm surprised we haven't seen that from Walmart yet, so I'd imagine we probably see something like that come soon, with Dollar Tree kind of being one of the major big box stores coming out and say, hey, we're going to start buying back stock. I would imagine that could be one of the first dominoes that fall in the big box store side of things, of retail trade.
Yeah, understanding sort of the options that CEOs have at their disposal. Historically, I think some pundits have felt like, a lot of pundits, some analysts have felt like, they don't love share buybacks. They don't love leveraging your money that way. They always want to see you spending your money in ways more like, from a growth perspective, acquisitions,
Yeah.
investment, and R&D. I don't buy that. I don't believe that. I mean, I think from a supply and demand perspective, listen, if if your stock dips and you have cash on hand, scooping up some of them shares, I think that's a very legitimate strategy. And I think as we move forward, it's becoming more and more normalized and less frowned upon. But again, why wouldn't you?
Yeah.
So you think about a company like Sam Adams. Could Sam Adams consider doing things like this? If your company takes a drop, you have cash on hand, you feel like it's unwarranted, great opportunity at your disposal. Obviously, dividends as well, if you feel like you want to leverage some cash as well. So value stocks certainly have that at their disposal, but growth stocks, why not either? Not the Dollar Tree is a growth stock, but these are what CEOs can do. And if they're running hot, obviously they also have the ability to stock split, all that other stuff. So I think being aware of these things, it's hard to predict who's going to be next in that, but certainly you're seeing more and more companies with the share repurchases, the buybacks, dividends, and stock splits as well.
Yeah. Yep. Absolutely.
Sorry, I was just reading Mark Peach. I don't know if that was CEI, my fault.
Yes. Yeah.
Jeff said Sam sure could use a boost. Sam definitely could use a boost, and Sam's going to be just fine. It may take a little bit of time for that to come back up, though. They've had some tough sledding. Their next earnings is going to be very interesting for sure.
I agree. This thing has continued to come down after earnings, and I tried to take a little bit of a position on this, and ended up not working out in my favor. So it's been on a pretty tough sled, but I ended up getting out of it completely. And I mean, I don't know, man. It's been tough, but yeah, I agree. The next time they have earnings, it should be interesting, because it's down over 65% from its highs. And at some point, I would imagine that we start to see this rebound, but it's really tough to determine exactly when that's going to happen.
Yeah. Next stock I wanted to bring to the table was Affirm. And I don't know if you've had time to process the news on Affirm. Obviously, Affirm has been on fire with the Amazon partnership news, but they recently announced a debit card. And they also recently announced the ability for crypto transactions. And I had mentioned in a level 3, I really like the debit card ID, the debit card exposure.
Yeah.
I love that they're doing that, but I feel like the market's going to care a little bit more about crypto, just because it's this, it's hot. You use crypto. Which one, how do you feel about those two catalysts? And as they move forward for Affirm, what does that mean to you?
I think it's definitely just another good source of revenue for them. Really just to kind of jump on the bandwagon. I don't know if it necessarily impacts them in the short term in any kind of way, whether it's positive or negative, but it's certainly a good thing for them for the long term.
Yeah, which one is that? Are you talking about crypto?
Yeah, just the crypto side of it. Yeah,
Gotcha. I mean, from a business perspective, long term maybe, but like day to day, I don't really think on the balance sheet crypto is going to show up in any way.
yeah,
I think it's a smart PR move because as you get people interested, you sort of get a subset of people who could get excited about a firm because of that. I think there's huge revenue opportunities though for that debit card, and I'm anxious to see how that rolls out and the adoption of it. Does it have the brand loyalty? There's still a lot that is unclear about a firm's strategy, and
yeah,
that's the weird thing about buy now pay later is like they don't really give you a ton of details in that. So hopefully over time we'll figure that out. But will a firm be a brand that people associate with and there's loyalty behind that? Or will it just be an offering? So that's going to be something that interests me. But if it does get adopted, I think that's huge revenue. A debit card for a firm. I
yeah.
mentioned that it could become a third. We talk about PayPal, you talk about Square. It's kind of building itself, sort of backing in the way PayPal has done. So I like the move. I think it's a smart move. Remains to be seen where the revenue comes with the firm. How's it looking technically?
Technically, it's not looking all that great. It's actually been having a rough couple of days, but I think this also has a lot to do with the 10-year yield making the move up. So we'll continue to keep an eye on this. We've talked about how, as the 10-year yield may continue to go up, some stocks that yet to have had positive earnings and not really knowing when exactly they're going to be profitable may suffer for that. So we're starting to see a firm take a little bit of a hit on that. I would say that there's potential for this to come back to retest maybe around 106, which is represented by this support line here. So keep an eye on that. I think that there's certainly potential for that to take place. Um, but I still like a firm longer term.
Yeah. And I mean, it's had such a run up as well. I
Yeah.
don't think any bit of a pullback would be that surprising. I mean, you were in it in the $60 range. So,
61. Yeah.
anybody that was in it earlier with the chaos crew that was, got it on the watch list, you should be in a really good position. But
Yeah.
um, I think a pullback was expected. We'll see if it falls down even further. Is there a point where you would consider, do you think you're going to get back into a firm?
I'm in a firm right now on calls,
Oh,
and
you're
which
still in a firm. Okay. I didn't realize that.
no, I sold out of it and then hopped back in.
Okay.
Those calls aren't doing so well. It might be my first big L on a firm. But I was still obviously super profitable on it, so I didn't do anything crazy. But if this comes back down to 105 and holds that area, then I would get back in.
Got it. Um, Somebody had asked you about why you sold out of calls on Ford. If you want to talk about that a little bit.
Yeah, it was simply for profit taking purposes. Ford's obviously having a little bit of a pullback of a day. I had a huge run on calls with Ford. I had a shit ton of calls on there. And it ran up and to me, I thought it got a little bit hot. There's a huge catalyst and I just didn't see it continuing to run based off of the news we got on Tuesday. So I decided to go ahead, or I should say Monday night. So I decided to go ahead and take some profit off the table, see where it went, continue to drop off. So then I just set a stop and then it went ahead and tripped. So it was solely for profit taking purposes. This comes back down to low 14. So then I might consider getting back in, but it still looks great to me. I think the next stop for Ford, as far as the resistance is concerned, is around 1485. So if this comes back down to low 14s, I may consider hopping back into this, but I really just want to take some profit on Ford.
Yeah, I mean, you did have a lot of exposure to Ford.
Yeah.
We had a conversation
Yeah.
offline, and I think it really speaks to we're similar in our strategies from the perspective of we're not trying to hit like the lottery, right? There's definitely many
Yeah.
things that we're in that we're profitable on, and they run after we get out of them. But we're just trying to be consistent and have consistent wins, and so not that there's a right or a wrong way to do things, but I thought the way you managed it made a lot of sense. I know a lot of people, think that we could be crazy because it's like, well, it could continue to run. Absolutely, it continue to run. But there's also situations where you end up bag holding because runs up, you get caught in it. I mean, Clover is probably the best example where Clover, Rocket, these are all stocks that have given back their gains, but
Yeah.
we've been largely green on them. And you just take the profits when you have them, and then you live to fight another day, and you continue to do it. That's not the only way to do things, but it sure helps you sleep at night when you have a 20, 40, 50% gain and you take it.
Right.
Why not?
Well, and that's
So
just it. With the Ford calls, I was up 175%.
that's wild.
So I just had to take my money and run on that. So yeah, that's all it was for, is simply for taking, I had the 14 straight calls, and then I had 15 straight calls, and they were super cheap, and they just went crazy. So decided to take my profits on that and run. And that's really the only reason I did that.
Yeah, guys, and if you guys are interested, obviously the question came because you had put it in level 2 of the Discord with your alerts. If you guys are interested in the Chaos Crew, that's our solid, rock solid community that you can't beat. Go ahead and click that join button. It's next to the chat. You get a free daily watch list. You get technical analysis. You get our access to our community, our Discord community. You get access to Brad's portfolio and alerts. Click on that join button if you guys are interested in the Chaos Crew.
Yep.
A question from the crew that I want to ask, and we'll get into Lucid. So if those of you here for Lucid, I want to wait till the bell for us to talk about that conversation, and we'll certainly get deep into it. We have a question from Oliver Thorpe on Peloton. So thoughts on Peloton? It's been very up and down, a bit worried we could see this fall down quite a bit. Is lowering the price of the equipment good or bad long term? So let me set the stage for this. Peloton has 2 bikes. So Peloton has a bike that they recently, more economical, and then they have a higher end bike, which is, what is it called? The Plus? Why is the name escaping me?
Yeah, I think it's the Plus.
Like the Bike Plus or whatever.
Yeah.
The more popular model is a more economical model. They just lowered the price. So I believe it's $14.95, and the crew can correct me if I'm wrong, but I believe it was $14.95, a substantial discount. So that's what Oliver is referencing. You talked about other factors as far as a macroeconomic perspective, but as far as them lowering the price of the equipment, do you view that as good or bad long term?
I think it's good for them longer term, because it's people got to remember the bike, while it does make them a profit, it's not as profitable as the recurring revenue streams are. So it's just like Costco. We talk about how getting people into Costco in the door is really what matters. And even if they're not making money on certain items, they're going to make money on the much larger items, or the ones that really matter, that they're going to market to the folks walking in the door. So that's exactly what Peloton's doing. They're getting your foot in the door by purchasing the bike and making it cheap, so that you buy their services for that recurring revenue for the business. I still think this is great for the company. Here's the thing, though. The multiple on this is through the roof. And we've had this conversation in the past about Peloton, that, from a fundamental standpoint, from a PE standpoint, it is overvalued. If you look at, just how much they've gone up. And going along with the conversation we just had, with a 10-year going up, companies that need to rely on lending to get themselves to a path of profitability is going to be a challenge for those particular equities. So as a 10-year goes up, it's going to potentially affect their bottom line and affect earnings. And so that's what people get kind of antsy as far as stocks like Peloton are concerned. But I still like the company. It's just going to have to settle out and actually find a bottom, because over the last 2.5 weeks, it has had one slightly green day, and we can take a look at the chart. So there is really no bottom that it's actually formed here just yet. So that's what I would really kind of like to wait on before I would consider either adding to or taking a entry on this, because there's just nothing here that's screaming buy just yet.
Yeah, this is a really good question, and I think that in order to get full context and make a decision on whether it's good or bad long term, I think you also need to find out how the cost is going to be impacted as it scales. Some companies, as you scale production, the cost stays the same, but there's other companies that is economies of scale. So as you sell more, the cost theoretically could come down for the bike. So you could end up getting more profit, and what you do with that profit's up to you. You can lower the top line so you still get good margins, or you can just keep that margin there. It's clear to me what Peloton is trying to do is trying to get more people in their ecosystem, trying to basically convert them.
Yeah.
So if they're in the ecosystem, like you said, paying $39 a month for their subscription, getting them on the bike is really the goal. But it's that recurring revenue that matters. Can we keep you in the ecosystem? And I think what Peloton's going to try to do is they have the rowing machine that's coming out. They have the treadmill that they're looking to produce, and that's arguably a bigger market. So if we can get you to buy the bike, which is what we're known for, if
Yeah.
you fall in love with it, then you're going to buy the treadmill, the rowing machine, maybe your whole gym's outfitted in that. Well, if our products are 2,000, 2,500, it's harder to justify multiple ones. So it seems to me what they're trying to do is getting more of their customers converted, but also getting their existing customers to buy more of their products. And if I can spend, $5,000, get two or three of your products, that's more reasonable than if I buy two or three of your products and I'm spending $10,000. That's really hard
Yeah.
to justify it. So I think what really matters, though, Oliver, is that I think what's going to make the difference, to your point about the multiples, Brad, I think it's the commercial side.
Yeah.
And we haven't heard anything this year about that. But that's where the fundamentals are going to become within reach, because the revenue that can come from commercial is going to be huge.
Yeah, it will be. It's going to have to wait until the yields start to figure themselves out. I think um, you bring up great points. I mean, the bringing them into the ecosystem is huge because we look at the churn rate of Peloton and it is next to nothing. Once you're in, you're in. People rarely
Yeah.
leave, and that's really important, an important metric to really pay attention to. The other side of this, though, is again, just looking at it from a valuation standpoint, and if you start to see people moving into more value oriented stocks, especially as we start to see interest rates go up, this wouldn't bode well for Peloton. So at some point, we're just going to have to see this bottom itself out and actually, start to see some sort of slowing of the selling, and then perhaps start to see it move back up. But there's no denying that the product's good from the streaming side of things, as well as, or from the service side, I guess, however you want to phrase that, and then their physical product itself. It's all good, and the long term outlook on this is going to be great. It's just going to probably get a little rocky here until we start to see some sort of consolidation here and some sort of bottom support for Peloton.
Yeah. And just to add one last thing to that, because I don't think I clarified this correctly. All those things are good for the company, but I don't think those things turn around the company. I don't think
Yeah,
making the bike cheaper. I don't even think converting their ecosystem does it, because they have the Zoom challenge. Their growth was just so huge.
yeah,
They're not going to be able to replicate that. What they have to do is create new revenue streams, and they have to show growth in different areas. And it doesn't have to be the same as the pandemic, but it has to be a new opportunity. And that's where I think the commercial comes into play. My concern is that the commercial isn't, I don't want to say it isn't close. We just haven't heard about it. And
right.
so until we hear about what is coming in, I think that's what's going to take the catalyst to move. But it definitely isn't going to happen this year. I don't think the commercial is going to really show up on their P&Ls maybe mid next year,
Yeah,
maybe if we're lucky. So that's a little bit of a tough sled. If you dollar cost average this thing, if you're patient with it, there's still opportunities. But they're just like Zoom, it's a little bit of tough sledding, because they have just such their comps are so hard to compete against.
Yeah, I 100% agree.
So let's talk about the market. How the market closed.
So the market closed today on the green side of things. Let's take a look at I'm going to pull this up on the overall markets here. Everything closed green, I believe, except for the Nasdaq. Yeah, so S&P was up just barely, pretty much flat, up 6.8 points. Dow was up 91 points, 1/4%, and then the Nasdaq was a red about 1/4%. So pretty flat day, but a very, very choppy. Oil
Yeah.
also took a little bit of a backseat, down 1% almost on the day as well. So we'll see. I mean, this seems to me that potentially this is a little bit of a bottoming out, and maybe we could probably not tomorrow, considering it's Friday. We usually don't see we usually don't see too many green days on Fridays in general. But it could
Tomorrow's
be.
Thursday.
Oh, geez, whiz! It's only Wednesday. Yeah. Anyways, maybe tomorrow's a green day. Shit. Don't listen to me. Oh my God. So, anyways, yeah. So I think that we could potentially be seeing a bottoming of, especially the S&P chart, and start to see that maybe turn around. This whole fear and noise that we're seeing from Congress and the yields and all that stuff, I think it's going to sort itself out here pretty shortly. I mean, this is all good stuff. The reason the yields are growing up is because the economy is coming back, and when the economy comes back, it's just important to know what you should be into and what you're looking towards. Some of the stocks that have really underperformed the market, and we're still talking about Apple, Amazon, some of the big fangs, Fat Man Zoom, that still have underperformed the market considerably. And those are the tech stocks that don't need to worry about the interest rates because they don't need to borrow money at this point. So those are still going to be ones that I think that are worth taking a look at, especially as they've seemed to have dipped with the rest of tech. And it's a bit unwarranted, if I do say so.
Yeah, and I just want to throw out in as far as Fang's concerned, we haven't talked about it yet, but the news today on Netflix, Netflix had, I thought, great news where they had made an acquisition with a gaming company. And so it's clear their focus moving forward is to add a new revenue stream, a new opportunity with gaming and streaming gaming. I
Yeah.
love the move. I love that opportunity because it just seemed like, obviously everything was so predicated on them maintaining the number one position in streaming and them dominating streaming. And how could they continue to grow just that level? They'll still be number one. I'm not worried about that. But if they can actually dominate in online gaming and being ahead of the curve as far as that, I'm really excited to see where they take gaming. But I feel like you've got the model for their content and their streaming content. Could they be making their own games? Could they be original content gaming? Could there be that market there for revenue? I thought the move was great.
Yeah, I did too. I mean, Netflix did great. Apple had a halfway decent day. It's still kind of starting to move up a little bit after hours, but obviously you can see the chop here was a little bit all over the place. The only one that really didn't have an incredible day today was Facebook, and actually ended the day green. We look at Amazon. Also, I believe that one ended slightly green, unless it changed. Actually, slightly red on the day. Starting to move up a little bit after hours, but so these I think are going to start making a comeback once people realize, oh, that's right, Fang stocks, yeah, they don't need to care about the 10-year yield as much. So this is, I think, good buying opportunities for Fang in general. Obviously, with Netflix having a good day, but just across the board. I mean, you look at Microsoft, Amazon, Facebook, and historically, when we start to see interest rates go up like this, these value, quote unquote, value / growth value, whatever you want to put it into. So, like, you look at something like Amazon and Apple, they're growth stocks, but I think that you could also consider them, and you should also consider them value, tech value, whatever name you want to throw onto it. But these are not the ones that I would consider are in any kind of danger of a interest rate hike.
Yeah, for sure. And I mentioned earlier, I got some leaps on Apple. I'm looking for a good, solid Q4, and I
Yeah,
think a really good Q1 next year. I think the next 6 months should be really good for Apple. That's how I'm playing it. So we'll see what happens. But let's get
lots
into
of
the
great.
topic of what's that?
Sorry, I was just gonna say lots of great demand I'm seeing on the iPhone 13. By the way,
Yeah, for sure. We've talked about that. I think people's predictions on the iPhone 12, I
yeah,
think didn't play out. They still had a really strong showing, but there's still a ton of opportunity.
yep,
And yeah, initial numbers are really good for demand. iPhone 13 comparable to 12. So
yeah,
we'll see. But yeah, getting into the main topic of the day, Lucid Motors, we can't help it. We're still talking about EVs. We
I
talked
know.
about Ford yesterday, but I think the news warrants it. And I'm really excited to talk about this news today. Lucid stock did really well, pulled back a little bit, but still had a solid day. And what for? So Lucid had their preview week. They had their Arizona production facility where they had people come through, look at the technology. Right now, it's about their sedans, their Air, also their Air Dream. But we've talked about the range, 500 miles, which is legit. We've talked about, them being a premium EV. I think it makes sense how they're structuring. The catalyst really was the CEO speaking and talking about deliveries in late October. And we've talked about companies, and we need to see sales. We need to see how that's looking. So the numbers, while they're not blowing you away, he talked about in 2022 and 2023, the targets, their production targets they reaffirm, which is 20,000 vehicles 2022 for production and 50,000 2023, which implies 125% growth. That's awesome, man. So I think that's really got people excited. I think that it's good to see one of these companies. This was a SPAC. It's good to see them really executing on what their plan is. What are your thoughts on what happened in the news with Lucid?
I think this is great. I mean, it's not something that I think should come to any kind of surprise to anybody. I was in on this when it was down at $20 and then ended up taking my profits once it finally went crazy and parabolic over the 200-day average, and was looking for areas of opportunity to get back in. I think once the dust settles, I will look to make look to find some areas of opportunity to take another position on Lucid. But we were talking about this. There's very few companies that are solely focused on EVs that I think could actually hold a candle to their competition, and that is Tesla and the conversation we had yesterday about Ford and some of the main manufacturers that are getting into EV game. Lucid's definitely up there. I think it's very compelling, especially with the range, the battery technology that they have, and the range that they're able to provide, along with the performance side of Lucid. I think there's something there. I don't know if it's worthy of a $44 billion valuation. Do you make the argument about Tesla as well and their valuations concerned? So I think you throw a lot of that out of the window and just kind of look at what the future holds for a company like this. And the fact of the matter is that this is a company that doesn't have just a shell that's rolling down a hill or a poster of the product. They finally have one, and they're actually getting out there and selling this product. So that's a really strong step in the right direction, and it makes a lot of sense. I think Lucid's definitely one to continue to look to hold on to. There's quite a few of them that obviously have been really shitty stocks and really shitty companies. Nikola comes to mind, but Lucid is a much different category. They actually have a physical product that they're putting out, and I think that's actually great.
Yeah, that is great. And I think the fundamentals or how you're riding this thing, because obviously the EV hype is one thing. I think the growth, there's a couple things that you would want to consider. I think one is rate of growth,
Yeah.
capacity, obviously how the supply chain is going to impact them. But this spike makes sense. I think that a pullback at some point would be in order. I think you're just going to see some general volatility. But the one thing that's really going to make a difference for Lucid, I think, is when these things start hitting the streets, how people respond to that and what people think about it. Because, the experience is going to be really important for it. But ultimately, it's a premium vehicle. You're not going to see, a million of these produced. But if their reputation is strong when it hits the streets, if people start getting excited about Lucid as a brand, then them it'd be interesting to see, like, do they come up with a more affordable model? And how do these things actually work out? But you talk about the range is great, how they continue to improve. I don't know anything about their margins. So what are the costs associated with? Obviously, batteries are a huge cost in that. But initially, it does seem like they're doing the right things. And, as those sales grow, hopefully they'll grow into their valuation.
As this has moved up, pretty considerably, the other thing that people should probably take note of is the potential for offerings. You have a young company that's starting to see some resurgence here, and offering is very much a real thing. It could be a possibility here for Lucid. Obviously, they sold a lot of shares when they went public, but that doesn't mean that they can't keep doing it. So certainly a risk there as well. With young companies, you're always going to see this. I mean, Tesla even did that in the beginning. So definitely something you want to consider. So the big question was in the title of today's video was, is Lucid a buy? Are you too late? I think at this point, I would stay away from Lucid just in the short term, because I think that there's potential for this to pull back at least to the 200-day moving average, which would bring it around $23 a share. We take a look at the chart here, represented by this purple line as the 200-day moving average. So I think that we could certainly see a pullback there. I'm not saying that you can't own it, but I just don't know if I would buy it all the way up here, given the amount of how much this is run. And we always talk about that, not buying into, strength, but selling into strength and then buying back into weakness. And I think that this is going to be a classic case of that, is that once it has a decent down day, then maybe look for opportunities to buy in the Lucid. But I think it's a little bit too late to consider getting into it, at least if you're looking to trade this in the short term.
Yeah. And I'm seeing if I have the numbers offhand, but some people were talking, I know Doction, they are delivering vehicles next month.
Yeah.
So they will have sales. And that's why I think it is promising. I think that's why there's probably a bit more of a reaction. Assumptions, as far as Brad or Don mentions, I would assume margins are tight, and why they started with the model that costs $165K, build from that and snowball down. I don't think so, Brad. I don't think that's why the 165K. And you could disagree with me on that, but let me give you my theory. My theory is you start with a luxury vehicle, you establish yourself as a luxury brand, and then if you build a more economical brand, the masses are like, oh, I can get this, I can get like a more affordable version of this, like luxury premium vehicle.
Yeah.
If you start as economical and you try to get a luxury brand, somebody who has a ton of money is not gonna be like, why am I going to buy that like low cost product, or economical product? I mean, that's kind of my thought on why Tesla launched the Roadster as their first concept car. It was like, it got people excited.
Yeah.
That's my
exactly
thought.
Yeah, 100%. That's exactly why. That's exactly why you have a flagship car like that grabs a lot of people's attention. And that's exactly what Lucid's doing here as well. And we talked about this a couple of weeks ago when it made its first run from that $16 area through $20. And we were talking about how, when they came out with the 500 plus mile range vehicle, we were saying, this is not going to be a vehicle for everybody to start out. This is going to be for the folks. And that's not even the demographic that they're trying to achieve with this luxury vehicle. I mean, this is trying to compete with the high-end Mercedes, BMWs, and that's the look of the vehicle too. It's catering to that crowd, and I think that's really what makes the most sense. It's just kind of, this is the barrier to entry, so to speak, and then they're going to work their way down to more affordable cars.
What I'll say to answer that question, is it a buy? Anybody who's buying it, I have no problems with it. Yeah, it had a little bit of a run. You could say the fundamentals are ahead of themselves. If you have a long time horizon, I said in level 3, like, they're doing it the right way. And if you believe in the leadership, which I do like their leadership, if you believe in the product, then yeah, it could definitely be a buy. I think this is more an investment stock, and you're investing in the future and what they can do. Production capacity is going to be the issue. Their plant has a 90,000 vehicle production capacity. So you're banking on them increasing capacity growth and whatnot. But when the dust settles, like we talked about, is the legacy company going to be able to shift their operations and tackle the EV market? Or is a new company like this that's building it from scratch? Because they have actually been able to build that facility in Arizona. I think it was 9 months. It was under 12 months. That's really good. So that's their advantage is, if they can get infusion of capital, they can build up these other factories. So if Lucid's the one you love, absolutely, I understand that. You just got to understand the horizon and how are you playing this out? There's going to be volatility, but if if they knock the 2022, 2023 numbers out of the park, then yeah, it could be really good.
Yeah, I definitely think that long term this is going to be one to hold on to as long as you're okay with dealing with the volatility. Just to put it in perspective, Tesla has a forward PE of 411. 411 is their forward PE. So, Lucid is 1/10 of the market cap that Tesla is. And if you ask yourself, is Lucid worth at least 1/10 of what Tesla is? And the answer is yes. Then perhaps maybe Lucid is for you. We'll that remains to be seen. I think I'm going to hold off on this, but either way, I think it's going to be a good one long term.
Wakar has asked an interesting question. What are your thoughts when comparing Lucid to Neo?
There isn't one. Lucid's a better company, I think, hands down.
Okay. I think. Thanks for all the details.
I'm just saying, analysis. I know. I'm just like Neo's is just they have the battery swapping technology, and that's fine. But who wants to own a Chinese stock right now? Nobody. Like it's just I don't want to touch anything that has the PRC has their hands into.
Loose. I mean, Neo obviously has the Chinese market as far as sales are concerned. And so, it's interesting because I never thought I was really surprised at actually sentiment around the actual Neo car is relatively positive, which was surprising to me. But you definitely have the regulations around Neo, and I think that's scary. However, again, I think it's which one's yours? I think all these deserve to be on your watch list. It's just nice that they're legitimate companies, what I classify as legitimate companies. When you talk about a Nikola that was trash, Lucid, Neo, I think it really is just what's your risk tolerance? Where do you feel like the industry is going and what's going to catch hold? But yeah, they're the only common denominator is their EVs, but I think they're competing in different markets. I think they're competing in different spaces. And so Lucid's competition isn't, I wouldn't say that they're talking about Neo. I think they're talking about Ford gaining market share on Tesla, GM, maybe some of the European brands, but I think it's more about, the legacy companies here and can they get market share on Tesla as a stock. I think I would feel more comfortable investing in Lucid than I would in Neo just because of the uncertainty in China. You just never know.
Yeah, I mean, you also have a Volkswagen and Porsche in there too. I think would be competition to something like Lucid for sure.
Yeah, that's definitely a fair point to make. I don't know too much about their international plans and when that happens and how that happens. I think there's going to be enough demand locally, domestically in the US. And then Europe would be that next stage, but for sure at home, taking from Volkswagen, taking from, the Audis of the world, even the Porsches, as you mentioned, they're going to get that premium there. And I also think there's a group that we haven't really talked about. There's the anti-Tesla people. I think there's going to be people that just don't want to buy Tesla just because it's like they don't want to have the car that everybody's driving. They want to buy something different, but also they just are against sort of like the mainstream popular choice. I think there's a cult that will be built there. The range is good. I want to see reliability, but I think it actually is going to be a well-received car.
Yeah, I
Looks
agree. I agree,
good.
and maybe it could be people that are we're gonna do a little bit of a subject change, but it's a good segue because I think there is some people that just don't like Elon Musk.
That's
Um,
true too. Yeah.
and I think that maybe that's just I mean, and we could even take this to like the government side of things. I mean, they weren't invited to an EV summit simply because they didn't have unions, whereas Ford and GM and some of the other ones were. So there's definitely that element of it as far as Tesla's concerned. Elon Musk is officially the richest man in the world again. And he decided to just troll Jeff Bezos and and talked about possibly sending him a silver medal. Did you hear about this? Yeah. Elon Musk is taking a jab at Jeff Bezos. This is from an article from homepage from from Insider, from Business Insider. So Elon Musk is taking a jab at Jeff Bezos after becoming the richest person yet again. On Monday, Tesla and SpaceX CEO became the third person to ever be worth $200 billion, according to Forbes. In response, Musk said he was sending Bezos a reminder of where they stood on the Forbes billionaire list. He said, I'm sending a giant statue of the digit 2 to Jeffrey B., along with a silver medal quote from Elon Musk. And so, like, this is interesting because the SpaceX thing, I mean, has been it seems as if Jeff Bezos has fallen second place to Elon in several different ways. Obviously, from
Yeah.
being your net worth or whatever, but also with the SpaceX stuff. You had Virgin Galactic spend about 30 seconds in space. Then you had Jeff Bezos spend about a minute and a half, 3 minutes in space, and then Elon's like, "Fuck it, I'm going to send a bunch of civilians up there, and they're going to spend 3 days circling the Earth and come back down." And then everybody's going to be like, "Well, so much for that." Like everybody thought the penis rocket was such a big deal, and then Elon's like, "Okay, hold my beer." It's just wild, bro, to see the dick measuring contest amongst billionaires.
Yeah, I wonder how history will look upon these guys because I
Yeah,
think there's a good chance that history will forget Jeff Bezos. I'm not gonna lie. Like, great, he started Amazon, and he's like, I think he's a great leader of people, and opportunistic. But I worry that Elon's gonna overshadow this whole like generation because of what he's doing, and it's got to just get under Jeff Bezos' skin.
it has to. It has to. It's just mind blowing. I mean, and it's hilarious at the same time. It's one of those things where, like Kobe would talk a big game, he would talk his shit, but then like live up to it, right? And Elon, as much doubt as people want to throw at Elon, he talks his shit and then also lives up to it as well. And
Yeah.
that's what it feels like. It's like that kind of mentality. Uh, I don't know, man. It's just crazy, and people still think that Tesla's overvalued and that it's going to come crashing down or whatever. Then you have the people obviously in Kathy Wood's camp who think it's going to 3K. And after you see Elon just follow through with every single thing that he does, it's like, how can you doubt it at this point?
Yeah, I agree. And he's quickly becoming just like an unstoppable force. And
He is one. I mean, forget about becoming one.
yeah, I mean, he's, you know, he, I remember back in like middle school, they used to talk about multinational corporations taking over. But when you think about the influence of Elon Musk, first, the difference between him and Jeff Bezos, as far as their engagement, um, you don't really hear from Jeff. You don't really see Jeff. Elon is in the thick of it. He's just
Yeah.
like you and me. And that's what makes people so loyal to him. And when they buy Tesla, they're buying Elon. They're buying into Elon. I hate to see the day when Elon announces that he's leaving, because he can't do any wrong. And like you think about the relationships he has with China, and that's really his ultimate competitive advantage with Tesla is they have really good relationships with China.
Yeah.
And so they have access to that market, and what they're going to do in Europe, China, US, like my man is just crushing the game right now. And then you talk about the space race, you talk about Boring Company, like the guy just he feels like you and me, but clearly he's just on another level intellectually. And that's why I buy into Tesla, because I'm buying into Elon.
Yeah. I mean, the dude's an alien. I'm pretty sure he is.
Nate says he's a trolling genius. I mean, he is our greatest troll. There's no doubt about that. But yeah, I love to talk about that. And that's where, when with business, when I used to work at bars, you always think about your competitive advantage and you always look at your competitive strategy. And, a lot of people fall to like price competition, and I never competed on price. And I love companies that don't compete on price, that compete on relationships. We can all get the same parts. Tesla can get the same parts. We can get the same, they give away their strategy, right? They're not trying to hide anything. But what they're essentially saying is we're competing on relationships and we're building those relationships. They're not spending money on marketing. They're not spending money on advertising. They don't even have a damn PR team. Elon's like, no, I'm just going to go on Twitter and let you guys know what's up. Like, how do you even compete against that? That's the secret sauce, guys. If all these EV companies that you're saying the next Tesla, it's like, I don't know who the CEO of NIO is, to be honest with you. I have no clue. Like, you're not going to, you might build a good product, but you have to be so much better than Tesla. And then you have to be the capacity to deal with it. Man, Elon Musk he's the man.
He sure is. Guys, let us know what you guys think in the comments below. I see a lot of the comments rolling into the chat, and I'm loving it. You guys are really great. But that's going to do it for us today. If you wouldn't mind hitting the thumbs up, we certainly would appreciate it. You guys heard us talking about the trades that we were making. If you're interested in seeing those, hit the join button next to subscribe and become a Chaos Crew member. It helps support the channel, helps support the studio behind us. Fat Man Zoom will be back in the house this later on next week. But we still have one more show to go through for tomorrow. That is with Freddie Valois. So you're not going to want to miss that. So hit that subscribe button, hit the notification bell to get notified when we go live, because you're not going to want to miss Thursdays with Freddie. I feel like it should be Fridays with Freddie, but we love our Fridays too much. So it's Thursdays with Freddie. We can't wait to have him on. And it's going to be a good day tomorrow, guys.
I just want to say a couple of you guys asked about Chamath. We aren't going to do it. It is today. It's actually about to begin right now, but it's like $1,000. So it just wasn't worth us spending for that.
Yeah.
We'll wait to hear what comes out from it. But it should end in about 25 minutes. So definitely keep your eye on Twitter. Keep your eye on Chamath stocks to see what happens. Shout out to IPOF. Let's go, baby.
Should have had everybody donate. Donate $1,000.
Yeah, exactly.
All right, guys, that's going to do it for us. Thanks so much for hanging in. We'll see you tomorrow at 3:30 p.m. with Freddie. Bye.